Hi, my name is Brad Lynch, also known as your mortgage guy for life. I'm a residential mortgage loan officer or loan originator in Flower Mound, Texas, located at 2001 Lakeside Parkway, Flower Mound, Texas, 75028, working with Premier Nationwide Lending. In this message, I wanted to just give you some basic facts about the FHA mortgage. And some of those facts, I'm going to go in order and talk about these. One's going to be the mortgage insurance premium, annual and monthly, also known as MIP, and the upfront mortgage funding fee that FHA has. In addition, we're going to give some details on the new updated maximum loan amount that FHA allows, down payment, minimum down payment, and where the down payment must come from, which is what we call source. And then I'm also going to talk about general facts about the FHA regarding appraisal facts, closing timelines, and the way that the seller perceives a offer or a bid from an FHA borrower. So going back into the mortgage insurance premium monthly and upfront funding fee, effective in January 26th of 2015, the U.S. Department of Housing and Urban Development lowered the FHA mortgage insurance premium by 0.50% or 50 basis points. I'll tell you exactly what that breaks down to as well. The annual, also known as monthly, and the reason why I say that is it's considered in proper terms as an annual mortgage insurance. But what they do is they calculate it as a 12-month or an annual cost, and then you divide it out by 12, and that puts it into your monthly. So it actually goes as part of your monthly payment. On 30-year fixed mortgages, if you're putting down less than 5%, your mortgage insurance factor is 0.85%. And if you're putting down 5% or more, it drops to 0.8%. And I'll show you a little bit later how that math is done to come up with that monthly mortgage. If you're doing loan terms of 15 years or less, that's going to be different. And you can contact me about those details and I can go over that with you. All right, the funding fee, which is rolled into the loan, is 1.75% of the base loan amount. So if you're putting down 3.5% of 100,000, let's say, and you've got 96,500, you multiply the 96,500 times the 1.75%, and that gives you your funding fee, and you roll that into the original loan, which gives you your final loan amount, which is what your payment goes off of. Okay, if you're looking at figuring out how to calculate your funding fee or your MIP further, you can go to my website, Your Mortgage Guy for Life, and I'll give you that link as well. Talking about your maximum FHA loan, also recently that was increased from $271,050 to $310,500. So now a lot of the people in the upper, going above the 250 mark, getting into the 300s can use FHA. Down payment and source of it. Okay, the minimum down payment that FHA requires is 3.5%. That's all FHA loans. If you hear someone getting an FHA loan, they didn't bring any money to closing, or they said they didn't have to have a down payment, then they use down payment assistance. If you have questions regarding that, get in touch with me. Our company has been some of the top volume in the state for down payment assistance programs. Keep in mind, if your credit is good and you have money in the bank, it's best not to use the down payment assistance programs because they come with a little bit lesser efficient terms. The interest rates are a little bit higher than they are. So those down payment assistance programs are designed for people that really need the money. Anyway, keep in mind, you can give me a call if you have more questions on that. Now, as far as having your 3.5%, it has to be 3.5% or more of your own money into the loan. Okay, that means if you have a $100,000 loan, you have to have at least $3,500 of your own money involved in it. Own money, or it can come from a qualified source. A qualified source is usually going to be a parent or a grandparent or a close relative that you can prove is a close relative to you, and so they can give you a 3.5%. Doesn't have to come directly out of your pocket. Please keep in mind those funds have to be sourced in season. There's certain ways that we go about this. Don't try to just handle it yourself and assume everything. Get in touch with me or another experienced loan officer to tell you how to go about that. Some of the other recent facts, or some other facts that I've recently come across that I wanted to tell you about, was appraisals. It used to be, I've been doing this for 13 years, and it used to be that the conventional appraisal was the appraiser didn't go in and look at the soundness of the property, safe, sound, sanitary, the health and safety parts. He didn't look at it like it is as stringent as the FHA. But since the mortgage crisis and the foreclosure epidemics 5-10 years ago, we found that the banks, so that they can make sure that the collateral to their loans, which is the homes, so they can make sure that they can recoup their money. They've gone in and they've required and put pressure on the conventional appraisers to tighten up their guidelines on that. So today, the difference between the FHA and conventional appraisal, as far as how they beat up the property and condition it for, let's get this fixed, let's get that fixed, is not quite the difference it used to be. So don't let someone tell you that, hey, you don't need to do an FHA because you're not going to be able to get this home because it needs too many fix-ups. Do your homework. Chances are, if you can get the home with a conventional, 9 out of 10 times you can get it with an FHA. But unfortunately, a lot of realtors out there still are listening to their mentors that have been in the business 20 years ago that say, hey, stay away from FHA, but that's not the case. That's just not the case. Get in touch with me and we can talk about that. As far as closing timelines, sometimes I even hear a lot of people that have not done, especially, and I'm speaking lots of times of the experienced people on the real estate side, whether it be a title company or a realtor or something that hadn't done a whole lot of FHAs, that they're just naturally scared of them, and they'll say, hey, we can't. Don't use FHA. It takes too long to close. But that again is just not a fact. We close at our company. We close an FHA just as fast or faster every time as we do a conventional. As long as everything goes fine and there's no trips or speed bumps in the transaction, we can close an FHA loan in 20 to 25 days, just like a conventional. So again, don't let FHA. And I'm not an FHA only loan officer, so I'm not telling you this just so you'll use FHA. I can do conventional just like I can do FHA. But if FHA is the right loan for you, don't turn away from it because it works. So in the same manner, sometimes you'll hear people say, yeah, but if you make an offer to a seller and they see that you're using FHA financing, because on the contract you disclose that in your third party originating section of the contract, they'll say, when they see FHA, they think that. No, that's not the case. I've closed 30 FHA loans this year. I've closed them all the time, and I've never, and I always get feedback from my buyers and realtors because I have relationships with them, and I never have heard someone say, oh, they took this buyer's offer because it was conventional and mine was FHA. It's just not the case. So if you have more questions, please feel free to call me, Brad Lynch, aka your mortgage guy for life in Flower Mound, Texas. Do loans all over Texas. My phone number is 469-450-2723. That's my cell number. If you'd like to call me at the office during the day, it's 972-537-0665. I appreciate you taking a minute to view this video, and have a good day.